How are you guys doing today? Welcome back. Today is January 18th. That was a sell-off, and well, here we are. If you are new, welcome. My name's Evan. We're going to be discussing technical analysis mainly, and discussing supports, resistances, trend lines, patterns, EMA lines, volume profile, RSI, stochastic, and the vortex indicator. Those 9 things make up my technical analysis trading plan. 9. The 10th being love. Welcome back. If you are a new person, my name again is Evan. This is By the Bulls, the only channel that encourages you to take your stock and trading and investing just by the Bulls, right? I'm also known as John Stockton.
Pulls up, three-pointer. Bang! Bang!
Also known as Chef Boyar Swing.
Hey, Mambo, Mambo Italia.
And of course, Bruce Swingstein. Those are great edits. I made them. I'll use them every single episode. If you're tired of them, shut up and get used to it. If you have never watched my channel before, I suggest off the bat, watch the full episode, start to finish. See if you enjoy what we do here. If so, I would appreciate a like, subscribe, and a comment down below as well. Also, if it's your first time watching, where have you been? Thirdly and lastly, I have a 25-part course for you for free on YouTube. Just check my channel name. It's on a playlist. It's the first page. It's the first thing you can see. 25 free lessons from skating, how I find these plays, how I chart them, how I play them, fundamental analysis, a whole bunch of great stuff you can check out as well, all for free on my YouTube. If you really enjoy my YouTube channel, check out the Discord links down below. Free trial going on, 25% off down below. I've talked about 18 days in a row now. Not gonna spend too much time on it. If you enjoy what I do, go check it out. We'd love to have you. We have a bunch of great stuff going on. Day trading scripts, whatever it is, option stuff, swing stuff, early content. Check it out in the description box down below. Lastly, again, I have 7,500 great subscribers and members here. I can't compete with the larger ones as well because they just have better algorithms and folks can push more. I would appreciate, if you enjoy this kind of content, a simple like, a simple subscribe button click, and a simple comment down below. You have 5 seconds to scroll down and do that. I'm going to encourage you to go down and do that by staring at you awkwardly right now for 5 seconds. Again, if you don't want to look at my dumb face, scroll down and like, subscribe, comment. Let's do it.
Prolonged eye contact. Prolonged eye contact. Prolonged eye contact.
Thank you. With that being said, 8 great plays today, all that are of value. We have 1 short in here. I'm not bearish until we lose the 45, 50 SPY level. Until then, I'm still bullish. If we lose that, all puts and shorts ahead. We do have some good shorts on here and some good longs. With that being said, 8 great picks. Thank you, Gremlin. Let's get into it. So first is ADI. A great looking trend up off this gap. 2 solid hits, 3 solid hits of 7% here, and now we're holding. What I'm also looking at with this play is a possible new pattern off this gap. Have a nice little wedge down. It hasn't formed fully yet. I think it's getting there. But if we do get a wedge down, it's going to coexist very well with this support anyways. But keep that in mind. We may have a great breakup potential going forward. This is an old resistance area, becoming a great support. It's been like this for months now. You even have a nice uptrend just like this, as you can see from this gap. Also coexists with this spot as well. The POCs are strongest support on this time frame. Trend up, plenty of volume above us, resistance is above us. In a market like this where you want to probably hold 2 to 4 days at most usually, and just kind of get your 5-6% and get out. ADI lines up beautifully with that. Low risk, high reward. I'm not rushing in with the lower lows and lower highs quite yet. I do want a better value. Somewhere probably closer to 165. Right under 166, I'd be happy to go in. Right here, ADI, great looking stock. I love what I see. I would do the extra due diligence to make sure. But for a channel up play in this market, it's fantastic. Let's check the indicators. What's so dope about this channel, besides me, nerd, is that I actually don't use indicators to scan with or chart with. I don't use the EMA lines, RSI, stochastic, vortex for that. I use them for 4 other reasons. It shows you trend, momentum, volume, and volatility. That's all it shows you. The indicators are the icing on the cake, right? You ever watch the Great British Bake Off and Noel and them are like, hello, governor, and you put the icing on the cake? That was a bad British accent. But that is the indicators, the whole cake, the sponge, the girth of the trading is going to be technical analysis. So don't rely too heavily on indicators. They're here to help us, but we don't rely on them overly strong, just enough to give us some insight. With that being said, let's get into this together and check the indicators together. Off the bat, I can see that we have a great value. When you're below all three EMA lines, you have a great value. Do the 10 crosses work well? They do. When you cross the 10, you often get really good day trading or short-term swing opportunities for a good week or two, or even again like this one, you get a nice 2% move on a day. Worst case is a break even. I wouldn't wait for a down here. That's almost 2%, and that 10 is okay, but that 50 and 200 is so much stronger. Waiting for that really screws up your risk versus reward. I would buy into value. I think we are low. The reason I think we have value is this. You have two ways to enter a stock as a beginner and as a basic idea. Value, momentum. This is a value purchase in my opinion because we're low, values are low, indicators show that we're low, price action's low. It's at a nice value. You know what a value is. The second thing is momentum. If we're not at value, are we showing life? Do we have a spot that we could cross to show life and actually still manage our risk? Like if we cross the 10 EMA line, we can then use that 10 EMA line as our stop loss area, cross over and keep going and still manage risk. So you enter off momentum or value. Right here we have value. I also think we have value, again, because of technical analysis. RSI 36, under 40 is good, so 36 is good. Stochastic is low. Bulls are bottoming out. Bears are up top. You can see bulls may getting down just a tad bit farther, but again, bulls are low, bears are high. ADI overall is a fantastic value for a bullish stock. Even in this market, you have some like this that still hold its shape, still hold its strength. Overall, it's fantastic. ADI, they're not rushing into anything at the moment, but you know, Thursday, it'd probably be really good to look at. With that being said, let's move on to the next one. I do love what I see though. Next is ALGM, Allegro Microsystems. A great looking trend up. That will be clear. I didn't include this wick or this little gap down option looking thing. It could be a bit lower. That's why the support play is obviously towards $28 right here. Right? This is a very obvious resistance that turned into support area. We have a massive sell-off. Am I rushing in here? No, not at all. I don't think that anyone would, prefer to rush into this bad boy with all this red, right? Again, even if you do kind of dip down at $28 and some change, like $28.50 be a fair price, you can risk 2, maybe 3% at most and be fine. And a full move is close to 30, so it's still 10-1 odds here for a full move. It is a wedge up. What that means is with a wedge up, when it kind of gets like this, right? All that means is that eventually it's going to break down. So if that's the case, don't get greedy towards the top. If we get to $33, $34, I'm not going to get greedy at all. I'd probably be ready to scale out in that area. But right here, great value. POCs are our strongest gravitational force that pulls us higher. We have that going for us. Plenty of higher highs above us that we can hit here. And again, if we do break down, we're probably looking towards probably 24 here. But right here, great trend up, great support. I love what I see. Just to watch it tomorrow. I wouldn't rush in, but I think right here, it's a great spot to watch. Let's check the indicators together. Again, can we play off a crossover? Absolutely not. I think the 10's too far away. 250 or too far away. We're not going to give up 8% to see that happen. That's almost 1/4 of our maximum profit here. I'm not going to wait for that. But it does show us that we do have value. Value because RSI is at 20. That's low. Hell, that's real low. Stochastic is low. Bulls are bottoming out and bears are high. ALGM is sold off intensely right to a great spot. Now, can ALGM get lower? Absolutely. Can it also rocket? Absolutely. No one knows the future. Someone does stocks and they're like, I can guarantee you this. Run, because they're lying. No one knows the future. I think ALGM here is good to watch, and then if it does show some pour and kind of show some green, yeah, then I'll consider buying it. But right now, I'm not rushing into anything, especially not this one. I'll give it a day or two at least. But ALGM, for a watch list item, it's fantastic. I do love what I see. Next, AMPY, our first short of the day. I had two, I lied. Easy short here. Absolutely easy. I mean, look, it's been up. It's moved up almost 500% this year. Unrealistically, not going to stay that long. The earnings are negative, right? The resistance is rock solid. This is a nice resistance trend or resistance line due to volume. There's no volume above $4.10. If I turn on volume profile, it's going to be a perfectly shaped D probably, a nice big old D. And above $4, there's no one going long here. See how sporadic and quick the movements get? No one's going long. Everyone at above 4 is selling. No one's buying here. It's going to come down, fill this nice little gap, come down farther, easy 10%. If you ever see a gap on the time frame, you know what that means, gentlemen? Come here. Gaps like to be filled, okay? So you see a gap, fill it, right? With stocks at least. So we have this nice gap right here, it wants to be filled. We have this gap right here, it wants to be filled. Gaps always get filled on these time frames. So every time we go back in history, we can go back and see almost every single gap that we can find right here. Doop, filled it. This gap. Doop, filled it. This gap. Doop, every time it gets filled. We have 2 below it. I want to see those get filled, and then maybe it takes off. But up here, easy peasy short. It's pretty idiot proof, to be honest with you. When it comes to our indicators, you can cross under the 10 and see at least a move of 7% to the 50 EMA line. That's pretty gnarly, considering that the bigger one's probably closer to 15-16% pretty easily here. If you want to wait for a value short, you're up here. Looks pretty good. Anywhere above 4 is a good spot to start shorting, in my opinion. But if you lose that 10 EMA line tomorrow, you can short and probably be safe with a buy limit around 385. And if you keep going down, just ride that bad boy down. We're obviously overbought right here. Obvious, we have a bearish divergence, which I don't look for often, but it's there. Look at this. These are all, let's go from here. Let's go from here. These are all equal tops. This is higher highs. That is a bullish or a bearish divergence. When the tops don't match, it's bearish. When the bottoms don't match, it's bullish. Learn something new. So this is obviously a bearish divergence. Bulls are on top, bears are low. And if again, the bears do cross over on that little EMA cross, you're good to go off momentum. AMPY, it doesn't have life over $4, right? The limit or the risk here is minimal, given that if it doesn't have any crazy due diligence going into it, it's just an easy technical short. I love what I see. If you're bearish on the market, if you're scared, this is a good one to start hedging on and looking at. AMPY, I'd watch list it. I do love what I see. Next is DARE. It's a nice penny stock. Off the bat, it's important to note, since this previous action over here, look how good of a support 145 to 140 is. It comes down here constantly and taps, right? Now there's a bunch of action that comes off this line as well, and a bunch of great higher lows across the board. I do think right here, it's a fine risk versus reward, 3 or 4% to see these 12 off a small move. It's still 4 to 1. A full move is much more. We're talking what, like almost, 4 to 1. Then a nice volume push is going to be about what, 10 to 1. Overall, great looking penny stock. Again, if you're bearish, don't touch it. All right, if you're afraid of the markets, let DARE come to 140. Anywhere down here is an absolute steal for a play like this. But if you are bullish, if the due diligence checks out, if the bioscience makes sense, if the Russell 2000 comes back, I would definitely check this one out for sure. Not rushing in, but it's a really good convergence spot, minus the macro markets making me nervous for sure. It's a really good convergence spot. Let's check our EMA lines. 10 crosses are fine. You can see a ton of crosses at 10. Usually about a day or two of really good day trading or short-term swing holding. And over here, it's getting pretty close. Right? If you want to wait for that cross, you can. I'm not the biggest fan of that. I think we have a good value here. Good doji. You can play out that cross. I personally wouldn't. It's just not my kind of play for this kind of price action. I'll go off the value. We have value under 40. Stochastic, it's fair. No bullish divergence, no bearish. It's fine. Bulls are low, bears are high. DARE could easily see 2 or 3% sell off and be right where you want it, or you can see it definitely crash down to 140 and you're really good, or it crosses that 10 EMA line. No one knows which way it's going to go. I don't really have no idea. But I think right here, really good convergence spot. I think it's low risk, high reward. I love what I see. DARE, I'd watch list it. Next is GOEV. This bastard's burned me once before. I called it right here. So it looks pretty good. It went and came down hard. Now, it's a different story down here, though, because the support at 630 is pretty rock solid. Anytime we get down to this volume profile line under 655, we wick down, volume gets real quick, and it usually comes right back. And again, we can risk here liberally 3-4% at most, and a move to the resistance is almost 15%, almost a 4 to 1 off the bat, just for the first benchmark. If it keeps going farther, it could be 8 to 1, 10 to 1 pretty easily. It's again a nice little penny stock at $6. Super strong support. The price action is pretty sporadic, and we're just going off the support line here. What we lose in convergence, which I mean the trends there, the supports there, the patterns there, all those kinds of things, we make up in an idiot-proof simple play. It's just a support play. There's nothing else going on. There's nothing to be worried about. It's just a support play. You also have the POC, which is gravitational, pulling us higher. So a very simple play and a very good one for an intermediate trader. Beginners, I'd be kind of worried with. 10 crosses are fine. Right, they're fine. Right, you get good 2-day, 3-day opportunities here. Could you wait for that here? Yeah, if you wanted to. It's 6%. I personally wouldn't. I'd go off of value, but you could wait for a crossover like you see here. Oh, good crossover. Oh, 4 easy %. you can definitely go for that. I would go off of just value, which we clearly have because RSI is low, stochastics low, bulls are at the bottom, bears are at the top. Eventually, folks are going to get tired of selling GOEV into this range and then go short something else, and folks will start buying at a good value. I think that's where we're getting here with GOEV. I called it a bit early last time, but overall right here, a great value, simple play, pretty ED proof. I think it's pretty good. GOEV, I'd watch list it. I love what I see. Next is HIW, a really easy short in my opinion. Off the bat, it is a broadening wedge. What that means is that eventually, because we're doing this, a new trend and a new pattern is going to form. I can go into the details why, but again, all you need to know with this is a new pattern is going to form. I think that's imperative, important here, because as we kind of get up to this resistance, you can see we always get here and crash down. Get here and crash down. Get here and crash down. It's doing the same exact thing here. There's no strength. No one's looking back historically saying, well, I could have bought it at 37, or at least I could have bought it at 43. I can buy it at 46 while it's starting to sputter out here. What I think is going to happen is we're going to come down hard, get back to this trend area, and then start hugging this trend area as we kind of move down farther. If you would want to hedge against the market, if you're afraid for bearish reasons, this is a great one to watch. I mean, there's no life above 48. It's already kind of coming down. If we're losing the 10 EMA line, we're probably seeing 44 pretty quickly. If we see 42, hold that short for a while, we're probably going to come down to 38. Very easy short here. I love what I see. When we cross under the 10 EMA line, what happens? We cross under it, big move down. Cross under it, big move down. Big move, especially up here. Big move down. Every single time we lose that 10 EMA line, we go down far, and we're already not looking great right here. So if we continue to have a red day tomorrow and we lose that 10 EMA line fully, this bad boy may be coming down pretty hard. Are we overbought? Yeah, basically. Not really here, which again, looks like we're kind of building up steam possibly, and bulls are about to cross under the bears here. So there's the possibility of a breakout if it doesn't come down the next 3 to 4 days. But again, with a buy limit at $48, the risk is pretty minimal. And if it does come down, it's going to be hard, swift, quick, and it's going to be something that's beautiful for a person who wants to be bearish and kind of short this market. HIW, I'd watch this dip. Looks good. I do love what I see. Next is PAVE. I like this one. It's actually the global ETF for infrastructure. So again, with Biden's bill coming and extra due diligence, this could be a great pick. Again, it's on you to do that. For me, it's a great technical setup. Again, we have great higher lows. 1, 2, 3, 4, 5, 6 of them. And again, now we're kind of pressing this resistance area at $29. Where it's starting to say, hey, bears, your time's up. And not only that, it's a great support play. Anywhere around $26, $80, $27 is a rock solid resistance. And now is a rock solid support. So if you are a bit nervous, again, you're risking 2, maybe at most 3% here, and a good move will get us about 9. So we're looking at about 3 to 1 right here. If we do get a breakout, it could be even better. I love what I see. Great convergence. The only issue is that the POC's gravitational is a bit lower. So if we do break down tomorrow, let's say it keeps showing red, easy entry at 25 or at 24.30. So again, right here, great trend up, great support, looks really good. Let's check our indicators together. Sure, a 10 cross is fine. You cross the 10, lots of great day trading and short-term swing opportunities. Wrong button, idiot. Right here, I'm not waiting for it. It's almost 2%. That's almost 1/4 of our profit. I wouldn't wait for that. I'd buy into value. Do we have value? Well, TA says we do. RSI is at 36. Stochastic is low. And if we do reverse soon, I'm not saying we're going to, but if we do reverse soon, it will form a bullish divergence. If it does, which would be nice. And then bulls are low, bears are high. I think PAVE is starting to kind of bottom out. Now again, it is a ETF, so the price targets are non-existent, and you have to do the extra due diligence. What does PAVE cover? What's it include? All those types of things. That's going to be on you. But for a TA standpoint, from a technical standpoint, PAVE looks fantastic. I do love what I see. Last is Sail, like that great song, Sail, where it looks pretty good. This is, I should also do karaoke on this channel. I have a great singing voice, obviously. Sail is a great looking support play. Again, when we give up in convergence, we get back in pretty idiot-proof setups. Is there a chance we're kind of forming a wedge here? No, it's breaking down. I was just looking at that a minute ago. What we can clearly see is we have a nice resistance trend that's coming down nicely. Wait for a breakout. Sure, I'd buy into this easy support spot. Whether it's going to be 40, whether it's going to be closer probably to around $38 or $39, it's yet to be determined. It's a huge sell-off. I'm not rushing into anything at all, obviously. I want to see where it's going to go from here. Really nice sell-off into great value. I'm sure it's overbought across the board. But maybe tomorrow, at 39.80, maybe at 40, it shows some life in reverses. There'll be a very low risk play, 1, maybe 2%, to see maybe hopefully about 10 or 12%. So 5 to 1, 6 to 1 pretty easily, even with a conservative stop loss. Great looking support play here. Let's check the indicators together. Can you play a 10 cross, which is actually very consistent, looks like. Good 10 cross. Whoop, 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 whoop. Looks pretty good. Can you play that? Sure. It's only 4% away. We're going for 12 or 15. You can. It's a bit far away. I'd hope it kind of forms a support, then it reverses. In that case, yeah, of course, right here, it's okay. I buy in a value. We have value because the TA shows it. RSI is low, stochastic is low, and then bulls are low, bears are getting exhausted up here. SAIL, sale is a great support play. It's pretty idiot proof. Again, if you lose 2 or 3%, you just get out. If it comes back, you can buy back in if you want to. But in a market like this, with a play like this, the number one thing is risk management, and you have that here. It's pretty clear. That's why I like it a lot. There you guys have it. Hope you guys enjoyed the show today. It means a lot that you guys were here the whole entire time. I'm sure I mumbled. I'm sure I stuttered. It's been a long day at work. Otherwise, we'll see you guys tomorrow for another watch list, for another episode. I appreciate y'all dearly. We'll see you guys then. Thanks.